I believe that we're really in today as traditional banks. We're playing catch-up. And we're playing catch-up because we have to. But it's now time to move from catch-up to actually leading the innovation that happens across the world. This might be really small for you to see, but I'll just show you. So we do a global consumer banking survey every year. And last year, we included Ghana in our survey. And this question really is put forward to chief executives, directors of banks on how they feel. So generally, there's a lot of positive feel. I know last year was tough for banking in Ghana with the consolidation exercise. But at the end of 2017, when we had this survey done and the outlook of 2018, a lot of banking executives were quite positive about the recovery coming down from 2008 and all the regulatory challenges that we've had, is that things will move, will be more profitable. So you look at in Ghana about 0.4 growth in return on equity. In Nigeria, it's quite flat, but at least it's not going down, which is good news. But the thing really is that digital transformation comes with its own costs. So what really banks are looking at is the widening of jaws. So revenue will be growing at a significantly faster rate than costs. And it's really important that we remember that. Another thing really around this is when we speak to top executives, what really is on their minds, and you can see really highlighted in green is implementing a digital transformation program. And the only thing that came above that was really around protecting the institution, so cybersecurity. And you really can't separate the two. So the more digital you get, the more risks you expose yourselves to, different types of risks. So it's no longer armed robbery, it's cyber robbery that you need to protect yourself from. And those were the top two things that the CEO said were their main focus. So we do know that every single one in this room wants to focus on digital transformation. But let's look back on where we really are today. And that's really digital maturity. So even though digital is the word for today, what you see in a country like Ghana is we have a huge percentage of the banks, close to about 70%, that are transitioning. So you've defined your digital strategies and you're in the mode of implementing those strategies. So no one really across Nigeria and Ghana are said to be mature today. And this is direct from the bankers themselves. But interestingly, we are very, very optimistic about the speed and pace in which we can mature. So if you see there, about 30% believe they will be mature by 2020. Because of the divide between what customers expect, what traditional players provide, and the differential in what the more innovative players provide. Globally, about 35% of financial services revenues are at risk, and most of it is from banking, about 26% alone from savings, lending, and payments. Now, payments came with a bust. It was the one where we felt most pain across the banking industry. But now, a lot of the payment innovators have now moved into even deposits and micro-lending, which is really taking over a lot of the retail credit or retail assets that we failed to create in this part of the world for the last 2 decades. The folks that banks should be most worried about are non-financial services players going into financial services, because there's already a perception from customers that they understand the experience better.